I'm gonna go over the fundamentals on why I chose not to go in Navan. There's 5 different fundamentals which I'll make a YouTube video on. I'm gonna go over 3 right now. Happy Halloween, guys. Okay, straight off the bat, one of the most important fundamentals is basically hype. One of the most important ways to assess hype is to go on your TikTok or Instagram, just like a bunch of IPO content. So when the next one comes out, it will show up on your For You page and you can assess, oh, there's cars and investing in this. Oh, there's other people investing in that. Or is Joshua Ingle, like, what do you say about this? This is to assess basically the retail hype, because these were like the main people that make IPO content are absolutely doing. There's also like IPO Market Watch on YouTube and my YouTube channel as well. Another way people assess hype is oversubscribe rate, but I think a good way of looking at hype, hype actually has to do a lot with the fundamentals and actually with the numbers in the company, surprisingly. Number 2 is financials, and not specifically financials, but comparing it to other companies. I saw a lot of people comparing Navan IPO with 30% year-over-year revenue, which is okay, but they never really compared it to other competitors in the market, in their same sector in the market, that were already in the stock market. For example, we have Phoenix IPO, which had, I forgot exactly how much year-over-year revenue, but they're making almost the same amount of revenue as the company, the 6 times its market share did in the stock market. And their EBITDA was lower, everything was lower, and their growth rate was basically the same. Versus something like Navan, yes, they had 30% year-over-year growth, but the other 2 competitors around the same size were making 81% year-over-year and 100% year-over-year growth. And even with that growth in the stock market, their stock hasn't been doing too well, as a sign the sector isn't really one that either one investors look at, or 2, it's that growthy in the stock market. Versus something like Phoenix IPO, that even it's a for-profit education platform, the stocks that have been doing that type of growth have gone up 100% in the last year, or 500% in the last 5 years. For something like Figma, it was super easy, because some of the financial metrics you can really just see, like they worked at 95% in the Fortune 500 companies, low amount of debt, a lot of clients, which we call backlog. And we already saw Adobe in the competing space already, so we basically knew it was happening, and it was more like Figma was actually going to take market share from Adobe. That's on an extreme major bullish scale. The last thing I'm going to say is backing. I don't think Navan had any backing, but basically you'll hear about if a stock is being backed by someone. There's really 3 types of backing. I'm going to go from least influential to the most influential. First type of backing is a line of credit, or basically give them a big loan to spend either on marketing or just to use on the product with basically little low interest backing. Number 2 is when a private equity or venture capital already owns part of the company, so they're already considered backing or inside of it, but they're going to help them. The last type of backing, when a company that's not affiliated with them yet comes out and actually buys a bunch of their shares, so it's locked down and they can't sell it open.